Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. It is Setup Sunday. Let's take a look at some charts here. Not too much going on with BTC at the moment. Daily Bollinger Bands very tight there. Bollinger Bands get tighter as volatility contracts and they expand as volatility expands. So it tells us what we already know in that not much has happened here on BTC in quite some time. Despite Friday legacy melting down, we had COVID 2.0 vibes with a new virus detected in Wuhan or discovered in Wuhan. Hasn't infected anybody to my knowledge. And we of course had the Bybit $1.5 billion hack. So that's moving some stuff around. That's moving ETH up slightly as they have to buy some of that back. We'll take a look at it, but ETH still mainly not someplace you want to be on the long side. So what do Bollinger Bands on BTC here tell us? We should see a move soonish. I'd imagine within the month, probably within the next 2 weeks, we'll have something. We have a PCE print this week that I don't think will be hot, as in higher than expected. But if it is higher than expected, I can't imagine Legacy is too happy with that. And if Legacy continues melting down, then that will probably drag BTC with it. At this point, any little catalyst is probably enough to drag BTC lower, especially if Saylor can't keep us up here by himself. Without Saylor, we would probably already be at 80 or have touched 80 at this point. So that could be part of the reason why the chart looks like it does. But we can quantify the Bollinger Band width. And if we look at the highlights here, which are showing the last time on the chart we were basically this boring, right? 2018, 2020 post-halving, and then 2023 during a few times. So we see this once in a while, but not too frequently. And you can see the Bollinger Band width there just falling off a cliff on the daily. You can also notice how long these lasted before finally moving. So it's rare, it can go on longer, and most of these have been bearish before the break. This was the only one here that I would say was wrong in that it was leaning bearish and broke up. This was leaning bullish and broke up. Leaning bearish twice, broke down, slightly later broke up. And then of course 2018 was dead on the money the entire time. So what do we not want to do if we're bullish? We don't want to continue closing below the 20-week moving average there. And if BTC is a momentum asset and it's not moving, we can look at other stuff. Speaking of Saylor, we can look at MSTR, which is certainly purely running on momentum and nothing else. So if that doesn't have momentum, if the 10,000 vol product doesn't have momentum, it's going to bleed. And that's what it's been doing. The good news here is the technicals, I'd imagine, would still be intact in that we get a cross above the cloud, bullish TK cross, bullish cloud. That to me is a great signal to take. It doesn't look good here, right? We're back to the midline of the pitchfork. The range is pretty wide here. Is this a long here? You know, it's a better long than 600, but trend-wise, I don't think it's a great long still, even despite breaking 300 there. You'd want more evidence above the daily, and we'll take a look at BTC, obviously, on the cloud there, just sort of hanging out. So if MSTR is a vol product, and BTC is a vol product, and MSTR is 2x BTC, then MSTX, which is 2x MSTR, is 4x BTC, and this is obviously breaking down. So that doesn't look good either. I only bring this up because people are asking me about options on MSTR and things like that. I am not one to buy weakness. That is not my game. I much rather would board the train at the station as it is taking off, not sit on the train 3 days early and hope for the best. So on the 4 hour here for MSTX, you are far away from anything that's bullish. Now this could change in a week easily. It's just, it hasn't. This does not look bullish here. And we can also look at BITU. Doesn't look as bad as MSTX. It's just, my point is you don't want to sit in this stuff if there's no momentum. And if there's no momentum on BTC and MSTR is bleeding, MSTX is going to bleed. So you got to pick your battles here, right? BITU, which is leveraged BTC on the 4 hour here, also dipping more bear than bull. You know, it's not, there's nothing here that says this is a great time to long based on trend. It just isn't. So not what I'd like to see on that one either. But the good news is the dollar, King Dollar, which reigns supreme, is rolling over. So eventually risk assets should buoy because of this. As I say here, this is the old schematic, the crypto happy, crypto angry, crypto euphoric schematic. It is back in the old multi-month range, DXY is, from 100 to 107. The deeper this goes towards 100, the harder it's going to be, most likely, to keep BTC non-volatile and just flat and down. It's going to be easier for BTC to drift higher the lower DXY goes. So if you're bullish, you're rooting for DXY lower. The bear case for BTC would probably be like a head and shoulders formation on DXY, which would eventually be bearish. But when we're sitting where we're sitting, if DXY pops back to 110, I can't imagine BTC doesn't go lower. So far so good on DXY. That's moving lower. 10-year yield also rolling over 4.42. We'll take it. We'll take it. Inverted cup and handle, edge to edge. Okay, fine. Anything. We'll take anything at this point, right? So dollar down, 10-year yield down. Oil also just doing a bunch of nothing, which is what you want to see. Oil up causes inflation pressures. So we do not want to see that for anybody. And as boring as BTC is, can you imagine being a professional oil trader? Look at this stuff. Week over week, it just retraces everything, goes sideways, does nothing. That's not the entirety of oil's history, obviously, but since 2022, it's kind of done a bunch of nothing in this range here from 70 to 85, 65 to 85, we'll call it. So as miserable as BTC is, it can certainly get more miserable on the lack of volatility front. Another bullish data point here is gold, which continues to break up. Gold and BTC rarely move together. So to see gold moving first should eventually be bullish for BTC. Once gold pauses or starts to roll over or looks weaker or loses momentum, then that is when historically we have seen BTC then take the momentum. Something else I thought I mentioned here on gold. Gold had a similar edge-to-edge potential breakdown here where it sort of faked it and then actually was in the cloud, bearish, TK cross, kind of like BTC is now, and just didn't break down, just sort of held there. It's also nearing its 1618 target from the move here. So secretly in the BTC front, everyone's always rooting for gold to be bullish because it's always more bullish for BTC. BTC is 10x gold. So if gold is bullish, BTC should eventually be bullish. That's the idea, right? And if we stack it all together, if we look at a liquidity index in the red there, BTC in the white, gold in the yellow, we had liquidity breaking out in July, breaking that horizontal resistance, then gold, then BTC. This time we have gold, liquidity, and BTC just stuck in the mud. So if everything around BTC looked more bearish, dollar up, 10-year up, oil up, liquidity down, gold down, it would be much easier to come out here and say, you know what, not only is BTC sort of bearish, but anything that you'd want to be bullish is also bearish. We just don't have that. So there is mixed signals here. Is this a bullish divergence? Could be a bullish divergence. But until this does anything, it's hard for anybody, I think, to take a big stab at this, because if this breaks down, it's probably 80. So your downside is 80 here. If you think your upside is 150, maybe it's worth it. 125, maybe not worth it. 250, definitely worth it. It just depends. So that feels like that's what the market is sort of waiting on, some resolution there. I thought I'd also mention this. Depending on the metrics you're looking at, M2, some sort of index, some sort of calculation. This is off Bitcoin Magazine Pro, but their M2 is also rising. And I'm not just picking out data points that are confirming some bias or anything. It's just like, look, they're both rising. Okay. I don't know what necessarily these calculations are based on individually, but there was some hubbub about the China number. I think it was M1 shot up and people thought China was printing money, and it was just how they were calculating M1. So you always have to be careful when you're using this sort of data, because sometimes you just don't know what you don't know. But even this calculation of M2 is continuing to increase. Before we go any further here, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to our trading style. You can check out Kraken Pro with a link in the description of this video. Not investment advice. Crypto trading involves risk of loss. Cryptocurrency services are provided to U.S. and U.S. territory customers by Payward Ventures Inc., PBI, DBA, Kraken. Starting with the cloud here, not somewhere we want to be. If we are bullish, to be honest, you do not want to be in the cloud after a move higher. If you're bullish, we have that. Historically, moving into the cloud with a bearish to get across like this, we typically see resolution quicker than we have. So it is a bit unusual that we're just sort of sitting here. This could potentially morph into some sort of mega ascending triangle. Hard to call that until this bounces. The TLDW of this entire video is above 99.5 and things get bullish again. At least moderately bullish, more so than they are now. That's the level. Because that's the cloud, that's the Kijun, that's the red line. We get out of trouble there, we negate the edge to edge. We tried to do that on Friday and couldn't do it. Little concerning, for sure. I'm also slightly concerned about this possibility. You know, just if you're bearish, you're going to see that. If you're bullish, you're not going to care. But it's something to think about and consider. Now, the measured move doesn't really change. It's still 80s-ish. If we look at the 20-week moving average, that's at 90K. So you got a level at 90K, you got a level at the cloud there, and you've got a yearly pivot, which I'll show in a second. That's at 80. So there are levels to watch on the way down, for sure. But there's going to be a lot of talk about retracing the entire post-election move if we start to break down. So that's... If we break down, that's something to watch for. How bearish, how quickly does sentiment shift? The quicker it shifts, the better, because then we typically bottom faster. What we don't want is just a bleed. Just bleeding out is never good for anybody. So on the cloud here, certainly not bullish, but the good news is the level is easy to see. We just need a daily close above it. That's it. That's all we need. Is that so hard? Is that too much to ask for? Look at the old pitchfork that we have here from 2022. We're still in the probably not a great place to think about getting turbo long zone. Similar to the MSTR chart, closer to the midpoint makes more sense. Now, I'm not saying we break down to 73, or we need to break down to 73, but over time into Q2, if we start to get deeper into the midpoint here, that's certainly on the table, right? If we break down. This would be the level like 70 to 75, something like that. The old breakout level where you could imagine a scenario where on a wick for 2 picoseconds of a day, we wick that deep. You know, I don't know, right? So those would be the safest bids, I would imagine. But bids on the cloud, on the 20-week, on the yearly pivot, I think that's totally fine until we're back above 99.5. Hedging or cash makes more sense to me than going super, super margin long here. Something else to watch is just the generic horizontal. It's at 92, 91. This whole range has just been nothing, you know. It would be easier, again, to come out here and say everything is so bearish if we had a very obvious bearish pattern. There are a few turbo bears who are very bared up on this domed house idea. Sure, I'm not going to dispute it. That's what it is. You can Google that one. But I don't see anything that's turbo bearish here personally. Even some sort of like diamond thing, sure. You know, maybe. That could be there. A lot of neutrality, a lot of wait and see, a lot of this is leaning bearish, but no slam dunk yet. That's all I'm seeing. Why am I looking at BTC, USDC? I don't have a good answer for you, but those are the charts I pulled up. All right, let's take a look at ETH real quick. ETH bouncing off of Bybit buying some ETH back. I don't see a reason to do anything personally until this is back above 3K. This is a huge chop range. Basically 2 to 4K has just been chop since 2024. I have talked about this inverted head and shoulders possibility, neckline of 4K. That's the pattern you don't want to miss if it happens, but I think pre-positioning for that is probably silly, but it's on the table. It's possible. But other than that, there's really nothing to say about ETH. Sol getting very angry today and breaking down, get rid of some of these old notes. Last week, I was discussing the head and shoulders thing. Again, you don't want to see that anywhere, ever, no matter what it is. If you're bullish, you just don't want to see it. Doesn't have to break down. But just like this repeated Adam and Eve into a inverted head and shoulders, broke up bullish as you'd expect it to. This broke down as you'd expect it to. It's below the cloud. You expect this to be bearish. Where could this go? I mean, this is a crazy target, even if we cut off the potential here, but 140, 120 is a potential move. And until this is back above the cloud, sorry, I don't see a reason to care. I just don't. It is down now over 40%, I think, 45% since the all-time high. I don't think the pump.fun stuff is getting any better anytime soon. And until we get some resolution on BTC, alts being momentum assets, being MSTR, being MSTX, leveraged BTC, they are generally probably just going to continue to bleed. Any given day, these can be plus or minus 20%. Anything in the Sol ecosystem is certainly in trouble. Not something I've pointed out at any time, but again, here's Ray, head and shoulders, broke the cloud. You don't want to see that if you're bullish on the daily. So I'd be very careful being margin long some of this stuff until there's some resolution on BTC. LTC was one of the only charts, you can see it on the daily there, above the cloud, bullish TK cross, bullish cloud. Great. 4 hour also looked pretty good. Still doesn't look bearish yet, but had a pattern, looked good, and then Friday happened and it didn't go anywhere. So that's fine. But this is kind of the best example of options right now on charts. And this is rolling over a little bit. But most everything looks like ETH or Sol, where it's just not in a place you'd want to be long. You just don't. You just don't want to be down there. You don't want to guess. You don't want to be in the abyss in Goblin Town, hoping that things turn around, and then things continue to just bleed 2% every day, 5% here, 3% there, 1% here. You don't want to be there. You really don't want to be there. So I do like LTC above 130, but here looks like it needs to continue to consolidate. And this is probably the bigger issue. If tomorrow, Monday, happens and we see continued weakness on the S&P, I'd imagine BTC starts to bleed and then it starts to break lower. Alts down 10% on the day, something like that. I could see that happening. If BTC goes to 80, alts are just going to get rocked, right? So if you're long alts, you're really rooting for the S&P here. You're rooting for legacy not to melt down. On trend, this looks fine. S&P can continue to roll over probably to 6K or something and be fine. It's above the cloud. There's no issues here. It's still in a multi-month channel. Looks great. QQQ on the 4 hour trade I took last week, broke out, gave it all back. Doesn't look amazing here. My stop loss is at 522, so we might hit that Monday. But as bearish as this is so far and looks and could be, it hasn't completely pulled me out anyway, which I'm probably wrong on this, but 522 is certainly the level. You don't want to see lower lows, and you certainly don't want to see a move below the daily cloud. And again, as bad as this looked on Friday, we're still above the daily cloud. We still haven't made a lower low yet. We're below the neckline, but I'm okay with that. So things to watch for this week. What does PCE come in at? I think that's Tuesday or Wednesday. I'll take a look tomorrow. How does Legacy open on Monday? On futures right now, I think are up slightly or flat. And then what happens with this daily Bollinger Band thing? Doesn't look like it wants to break down, but again, it just needs a little shove here on the cliff, and all of a sudden we're at 92. All of a sudden we're at 90.0, and then we break 90, and just not a place we want to be. If you're bullish, lots of people are bearish here, and that's fine. But if you're bullish, definitely got to be careful as this stuff breaks down. If you're trading this, if you're holding, what do you care? Let it break down. You can buy more lower. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.